Hello traders and welcome to this 7-part video series. Today we're going to be looking at part 3 out of 7 in the 7 steps for strategy construction. Such an important topic. And in today's part, we're going to be looking at step 3, the E component. We're going to be talking about this and more in this trading video. Hi traders, thank you for joining the Master the Markets team in our live trading session video today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Tirunalpan here, founder of Master the Markets Trades Conference and the Traders Open Day. So in today's video series, and actually it's more educational, but I'll refer to the live trading charts as we go along. We're going to be talking a lot, look at the E component. Now, for those of you who are thinking about, okay, this is step 3, what were the previous steps? Highly recommend you guys to go and watch and follow our Trading View channel, where we already have this 7 steps already published, and it's actually over here, traders, 7 steps for strategy construction. Before that, we did consistent trading performance. Highly recommend all this video series for you to watch, but this one here is on strategy construction. We're already getting so many emails and messages saying this is awesome quality content that you all haven't heard anywhere else. Yes, it's taken us a lot of years to put all this together with all our research and cumulative trading experience of 38 years for institutional quant traders. So today, coming to this, I really enjoy this, really take full advantage of it and incorporate it into your trading strategies and strategy construction. Today, I'm going to be looking at the E component. Okay, so let me just bring that up a bit. So I'll come to this in a minute for those of you wondering what the heck is that all about. Now, going on, the first thing I would say before we even talk about the E component, what is the E component? It is actually the entry rules in your strategy. The entry rules. Everybody, if all the clients that we've come across since setting up this company in 2010, where we actually research the markets and we trade it, whatever then works, then we share it through the educational company, which is this company where you're listening from, Master the Markets. Everybody that we've trained through Master the Markets always runs after entries. Where should I enter? Where should I enter? But remember, the E component traders is only one out of the 5 components in a strategy. Okay, this is what we're going to be going through as we go along. But today I'm going to go a bit more deeper into the entry component of the strategy, the entry rules. Okay, the first thing first, remember, strategy construction not everybody talks about, but remember in the first video I talked about a high level picture and I talked about the car. It's like building a car, right? So remember that these are just the small tools before you construct the entire strategy, and this is one out of the 5 components, just like the engine is one out of the 5 for 20 different components in a car. So when I talk about the entry component, before you even start choosing the tools and the parameters to set up your entry rules, you have to make sure that those entry rules, entry tools that you choose are in alignment. Okay, alignment to what, you may say, just like what we got here, the image, right? Alignment to what is this over here? That is the CO that we went through in our previous videos. Okay, so if I go on to here, let me see if I can show you that. There you go, right? Which strategy and CO, definitely go through that video. The CO, as a recap, is called the concept and the objective of the strategy. So the entry rules, that you choose, traders, should be in alignment with your CO, your concept and objective of the strategy. So that is what is we are talking about in here.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
The next thing then is then coming to your strategy rule sheet. Okay, all the parameters you're going to be choosing. All right, now all is always better, it's always advisable. I'll come to this in a minute. But in terms of the entry rules, the entry components, there's about 6 subsections, okay, in the entry rules. Everybody just thinks it's pretty simple and we just enter it and that is it. No, I'll go through it in detail. And then I'll also refer back to the charts as well. And then we will then see how we are analyzing the markets and professionals look at it and before we enter. Okay. Right. Of course, as you have any questions as you go along in any of the subsections, please post it in the chat box over here on TradingView. Right. The first subsection, traders, is that you must choose the rules for the direction of the trade. Which direction you're going to take, up or down, isn't it? Or you're not going to do anything at all. So for that trade direction, you need to choose the rules. Now the trade direction, whatever rules you may choose, it can be based on, as I've said, based on trend or counter trend, bottom to top, top to bottom. This can purely be based on price. You're analyzing price to decide on the trade direction, whether you're going to take short or long. Remember, the short or long also is dependent on your time frame as well. Some people who are trading on a longer, much more higher time frame, let's say monthly, weekly, they might be taking it up. Whereas you trading on a 1 hour might be taking it short because you're trading that small noise on the monthly or weekly time frame. But to know where you are in relation to which time frame is always important, and that's what we go through as well. Now, for all our clients. Now, that's one thing. So based on trend or counter trend, this is based on purely price action, which you can do the trade direction. Or another one, traders, you can take a look at moving averages, right? Usual ones. If you know certain moving average, let's say 50 is above the 100 and 200, then you take a long. And then there's so many of them, silver cross, etc., and all of this, right? So that's for trade direction. Another one which you can also take, which we have published a lot of videos on and ideas and all of that, is on the stretch principle, okay, based on bar formation. Now, some of you are curious to find out, hey, what is that stretch principle and all that about? You can always go to our channel, Master the Markets 2010, over here, and you can go under the idea section. The streams is where all our video series is, which you can refer to as you understand our strategies and incorporate into your own one. Under ideas, where we take live trades and everything and we show you in real time all our losses and wins, you can also take a look at the stretch principle video series, which is would be numbered as 5 out of 5, 4 out of 5, and all of that. Yeah, so you can take a look at that. It's under the second page, I believe. There, 4 out of 5, 3 out of 5. So you can watch that at your own time. Under Master the Markets 2010, you can follow us there as well and get quality content as we publish it. Now, the 6 subsections. Now, let me go back to the Word document back again. So that's how the trade direction can be. Just some examples, right? On price action, moving averages, or on stretch principle. It can be anything else as well. Maybe for some of you, it could just be based on a trend line. It's got to come back onto it before you take your trade direction towards the up on a bounce. All of that, traders. Okay, so all that would be under this section. All the rules for trade direction. The next thing is the setup. How's the price pattern, or how are the tools that are going to determine how your price action, price pattern setup is going to be. Okay, the setup, the warm up before you really enter. Okay, before it's like 3 2 1 ready go. It's like the ready, right? The ready is the setup pattern you're looking for. Right, now setup, what is setup really for? You see, traders, eventually, right, every strategy comes down to only two things which you have to choose the rules and parameters for. One is for the direction, which is what I talked about. Second is really timing. Okay, when are you going to enter? Okay, it's fine that you have decided that you want to go long, let's say towards the upside, you want to buy, but when are you going to enter on the chart? For example, one of the clients that I was going through that today, if you look on this chart over here, let's say if do I have euro dollar here? Yeah, I have euro dollar here. If I take a look at euro dollar on a simple um, Let me just erase that. On a simple trend basis, we call this an uptrend. And then, but you see, in an uptrend, I would always prefer to go towards the long side. Some of you may be just trend followers as well. But then the thing is, at the moment, this is a phase two, what we call. Now, when do I enter this? When is my timing? When am I going to buy into it? Of course, the fear is that if I buy into the seller bar, what if it goes down even more further? And when will it stop going further down, right? The timing. So now you need to write the rules, the entry rules to time yourself on when you want to enter into that phase two move, counter trend move before it starts to become in line with the trend and becomes a phase one. So when, the timing. So always remember that in strategies, the rules that you decide is based always on two things, right? Direction and timing.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
So the timing part, that's what we split into two. What is the setup pattern going to look like? Is it like a rule where you say, yep, that phase two got to come down more than Fibonacci 50%? What is it going to be for you? Is it going to be past that support line? It's got to pass through that? Or is it going to be a price action pattern where it's going to lift up a bit and then fail? What is it going to be? That's what this is about, setup. Finally, after the setup, and as I've said over here, TFC, you can use a time frame correlation as well to capture a bottom on a bigger time frame. So all of that under setup. Finally, once you got the setup, then you look for the confirmation signal where you really go in. In fact, in our framework, what we have done, traders, let me just go back to the charts again. In our framework, what we have done is our confirmation signal, according to our framework, comes on the confirmation bar, which is the bar with the dot. Okay, we've programmed all of that in. Doesn't mean that that is the holy grail. I've talked about all this before. It is just a framework from which we work from, which is gives us consistent execution, okay, and strong statistical backing out of it. All that kind of thinking and processing, you can look at it from our streams under 7 steps to achieve consistent trading performance. Okay, look at that. I'll explain all of this over there in terms of the confirmation signal and confirmation bar. What is the framework that we're looking at? What's the smart money framework that we are looking at? I'll explain all of that over there. Okay, good. So we got that one. So let's move on. So we got the third part over there, the TFC to capture a bottom on a bigger time frame, confirmation signal, right? So we got the direction, we got the setup pattern, then we got the confirmation, the third subsection, isn't it? And these two subsections is for timing, okay? Right. The next thing, the fourth subsection, which we should be looking at, is exception rules. When is it that you would not enter? Okay, so for example, you got this coming down, which is what we call a phase two move, all your pattern setups, but when is it that you won't enter? Okay, when you would not enter, or when you would not, let's say for example, you design a small simple strategy based on taking all the dots, right, all the dots with the smart money free, and what percentage risk are you also going to be taking it at? Are you going to be taking it at the initial original risk? Let's say if you took it at an original risk of 2%, are you going to still take it at 2%, or half of that 1%, or even a quarter of that? What is it going to be, traders? All this you must have written out. Finally, the sixth subsection is the cancellation rules. Now, when are you going to cancel your order? So, for example, if some trades you've got entry here, and then you got your stop loss here as well. Now, when are you going to cancel that trade? Now, for example, if it didn't trigger you, and then after that, then it just went down 2 bars further down, is that when you're going to cancel it using time? Or is it just based on technical level you're going to cancel it? Or is it just when it's no longer valid in trend anymore, you're going to cancel it? What is it going to be? So all that needs to be in this subsection on cancellation rules. Okay. So these are the 6 subsections over here you should be looking at. All right. The trade direction, setup, confirmation, setup rules, and then exception rules, re-entry rules, and what percentage risk, and finally the cancellation rules. Okay. So traders, so these are the 6 subsections that you should be looking at when you construct your strategy in terms of the entry component. I believe that not everybody will go through in much detail like this. Everybody just says, okay, which direction, and that's it, they're in to enter. No, as quant traders, we specify everything so that we know exactly when we're entering and what setups to enter on and what setups not to enter on, and what re-entry and cancellation, all based on these 6 subsections. Okay, right, good. If you got any questions, just type into the chat box. The last thing I do want to say is when you write all these rules, traders, it is always better and will make your strategy more robust if those rules on each of the subsections are validated by stats. They are stats validated parameters. Okay. Now, most of these things, in terms of strategy construction, different parts of the strategy for beginner and intermediate traders, we cover in detail in traderstarterpack.com. Okay, it's a 5-day video course. You can get it for free and you can look through that. So for beginner and intermediate traders, all right. And it's based on our 12 years of research from our 38 years of cumulative trading experience with the mentorship of institutional quant traders. Now, the stats validated parameters, when you choose the rules for your strategies, which is all this for the subsections, is always better traders if you have some kind of a stats backing it up. And that's why when we talked about consistent trading performance, the 7 steps, we looked at the smart money framework, didn't we? Where we will actually take a look at the stats, right? From how much will it move, which is what we call OE over here. How much will it move from the point of entry? From our point of dots is what we look at, right? And another thing also we look at traders is how much does it move against us, right? And then find the time too. All the stats will help us build the E component much more strongly. Okay, the 6 subsections, when we can include some stats validated parameters, it becomes a bit more robust and the strategy becomes more reliable as well. Okay, that's what we are really looking after when we know all these different stats, which we can actually pull out from here, right? Which I've shown you before in MAE and time 2. For those of you guys who want to go delve a bit deeper into all of that in terms of the smart money framework and the 3 stats, highly recommend you guys to go onto the streams under our channel Master the Markets 2010 and look at these 7 steps to achieve consistent trading performance. Start from part 1, highly recommend it. And the principles here, traders, are cross transferable. Okay, they're not rigid, they're very flexible. Good framework that you can incorporate into any strategy. That's how it should be all the time. Right, I guess that's pretty much what I wanted to cover on the entry component, the first out of the 5 components in a strategy. The next part 4 in this video series, we'll be looking at the I component. Okay, the I component, very important indeed, and it's one that creates a lot of frustration in traders. So I'll go through that much more in detail in the next live stream over here on the 7-part video series. All right, traders, I guess that's pretty much that from me on this session over here. I guess if you guys don't have any other questions, all I would say is till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.